Good morning, guys, and welcome to the show. This is, I'm going to report on some cryptocurrency this morning. I'm going to talk about Bitcoin. You know, here's the thing. Let me take a quick look here, and we're going to get the Bitcoin price this morning. We're at $39.43. You know, it's very stable. Just under $4,000, you know. And we're going to get right in there now this morning, and we're going to take a look at the charts right here. I got an article about institutional money in Bitcoin. Now, this exchange-traded fund is an important part. Now, I talked about how the exchange-traded funds are coming into the Security Exchange Commission, and they're submitting their proposals. Now, the thing about this is, they keep trying, they keep learning from the last failures. Also, the Security Exchange Commission themselves are working with these people to approve proposals. It's not like they don't want to approve a proposal. It's that they want all of the ducks to be in a row. Once the first exchange-traded fund gets approved by the Security and Exchange Commission, then we're going to see more start to gain approval too, because what it'll do is institutional investors will start flowing into the space. So we got this article, and it's from the prestigious Bloomberg. Crypto is finally poised to get institutional money. It says institutional money should start to flow into cryptocurrencies within the next year, setting the stage for a rally, according to Galaxy Digital Holdings Incorporated. The architecture that institutions need to feel comfortable with this, talking about cryptocurrencies, is being put in place. And, you know, I mean, cryptocurrencies, they have their place in the financial structure now, and they're securing their spot. Even though Bitcoin price is down and there's an awful lot of negativity surrounding the space because the prices fell off so much, an awful lot of this negativity has come from these people as saying, oh, it's tulip mania and all this kind of stuff. Well, no, I don't think it is. I think this is the wave of the future. I think that this is slowly gaining traction. Actually, not so slowly. You know, but let's take a look here. It says, all of the architecture that institutional investors need to feel comfortable is being put in place. You are going to start to see custody come online through the middle of March, paving the way for smart money to enter in a serious fashion. Once all the custodial solutions from the likes of Fidelity, which Norvax said has 200 to 300 customers interested in putting money in crypto, institutional investors could start to enter the digital asset space. He cautioned that money managers wouldn't all rush in at once, as many will want to see how it goes before committing capital. Well, the thing about this is I kind of disagree with that a little bit. I think that these institutional investors, I think that they will actually start to rush in because greed's going to bring them into the space, and they don't want to see their buddies make out big while they're left behind, basically. So I think they're going to rush in a little bit faster than he thinks. It says over the next 6 to 12 months, you're going to see institutions put a small amount of their assets in digital currencies. So this guy right here, Norogratz, he's a former hedge fund manager and from the Goldman Sachs Group. And it says that they've been amongst the highest profile of the Wall Streeters to jump into the crypto craze. What they're saying here is that a small amount of institutional assets is a lot of money. And he's predicting here that he says it can set the stage for a rally. He suggests it could take Bitcoin to $8,000. Personally, I think it could take Bitcoin a heck of a lot higher than that. I think he's being conservative. He says the price, evidently, at the writing of this article was $35.82. It's already moved up to nearly $4,000. You know, right now. Right now. It's been at 19,000 before. So, basically, we're all waiting for a rally in cryptocurrencies. The rally hasn't really happened yet. We're still, right now, in the bear market. Even though we've went up from like the lower 3,000s up into almost $4,000, we're actually still in the bear market, guys, right now. And this bear market could actually have a little bit more legs in it yet before it's over. But ultimately, what a smart person would do is, probably, now this is not financial advice, don't take it as such, but I can tell you what I'm doing. I'm trying to buy the dips, you know, and I'm hoping there'll be another little dip where I can get into a little bit more. This guy, Noel Gratz, also said that the next run-up was likely to separate Bitcoin out from a lot of other cryptocurrencies, reiterating that he thinks it's going to become digital gold. And, you know, that's what it was originally set out to be back in the day, you know, when it first started. It has all the earmarks. Think about it really for a minute. It has all the earmarks of a digital asset that is very rare and is a hoarder's. This is why there's so many HODLers out there, people that are holding on for dear life. The reason why is because it's got all the earmarks of something that you would hoard that's going to go up in value as time goes by. Gold has these exact same earmarks, you know. Limited supply. Actually, Bitcoin with its fixed supply is actually more limited than gold, because gold comes out of the ground, and there's a lot of gold that's in the ground yet that they haven't mined. That gold that's in the ground is dependent upon the price of gold for the miners to go out and mine it. So as the price of gold moves upwards, it has a limiting factor, and that limiting factor is the fact that these miners will start getting more money for the gold. So say gold goes up to $3,000. Just you know, say gold goes up to $3,000. The mines will start going out there and they'll start working harder to bring in ore, and they'll start making more new gold that they're going to bring into the market. But Bitcoin's not like that. Because Bitcoin has a hard limit of 21 million, and they've already mined a lot of them out. There's not that many left in, basically, like in the ground. Because, you know, you mine cryptocurrencies just like you mine gold and silver. They call them miners. And there's an awful lot of energy required to dig those Bitcoin out, you know. In fact, Bitcoin actually consumes as much energy as a small country. Really, seriously, consumes a lot of energy. Now, there's another factor involved here that I'm going to show you guys right now, and I'm going to talk about that an awful lot of people miss. You know, the miners in the Bitcoin industry are a little bit ahead of everybody else, a little bit ahead of the curve. They are smart cookies. They know what direction Bitcoin's going in. Now, I want to show you something here that's very important. I'm going to go to the Bitcoin mining difficulty chart. And what we're going to look at is over the past 9 months, the chart. Now, we see when Bitcoin was up at 20,000, look, the run-up, the miners, the difficulty, how hard it is to mine a Bitcoin out of the ground. It has everything to do with how many miners are trying to get them. So the more miners you have out there trying to get Bitcoin, the more the difficulty goes up. Now look at how the difficulty was going up here, up, on the lead up to the $20,000. When it peaked at $20,000, the miners were like, hey, you know what? This is worth it to mine a Bitcoin. There's a lot of them in there mining. What happened was when Bitcoin fell, the price fell. It fell precipitously. It fell down a lot, from 20,000 all the way down to like 3,000 bucks. It started to become unprofitable. And you see what happened here? Miners dropped out. They basically switched their machines off, right? But we actually see here in December of this year, starting in December, miners were switching their machines back on. And that's when the price was really down cheap. What did they know that we don't know? And ever since December until March now, you can see that the mining difficulty is starting to increase again. The miners are ahead of the curve. They already know that this bear market is getting long in the tooth. It's getting toward the end of the bear market. And they know, they must know, that we're almost ready to turn and go back into a bull market again on cryptocurrency. They know ahead of time. And I'm going to tell you, this is for me, this is a very important indicator right here. The fact that in December, the miners start switching their machines back on again, even though Bitcoin price was low and the cost of electricity hadn't went down. They're switching their machines back on because they're trying to get ahead of the curve. They know that Bitcoin is going to go way up. They know ahead of time. And you can see, up until March, you can see the difficulty increasing. Listen, thank you guys for listening. Like and subscribe. And for the latest the cryptocurrency news, come to the Delta Report. I'm on top of it. I research this stuff all the time. It's my job as a trends forecaster to keep you guys informed, on both of my channels. Financial Turmoil Explained. You can find it on YouTube just by putting in Financial Turmoil Explained, and here on the Delta Report. I spend at least 4 hours a day of research so that you guys don't have to. It's my job. I take it seriously. Catch you guys on the next show. Bye-bye, guys.